In the future, almost no one will sell their Bitcoin because big banks that are too big to fail, like J.P. Morgan and many others, allow you to get a return on your Bitcoin yield. Michael Saylor's strategy will not only become the largest Bitcoin bank, but the largest bank of all time. And Bitcoin will reach several hundred million US dollars. These are not my words, but the words of a strategy or microstrategy expert who presents one of the most fascinating podcasts ever. He is also a former Navy pilot and is now primarily focused on the strategy behind MicroStrategy, and he reveals the complete game plan here. Many people are wondering what the MicroStrategy strategy is really all about. We take a look at why this is more intense than most people think. All statements here come from George Bodian, who is not very well known, but in all the podcasts he has been on so far, people have gone completely crazy because he can analyze this as well as almost no one else in the Bitcoin space. We are now going to watch the entire clip from him about what the MicroStrategy tactic is really about, why it will pump the Bitcoin price up by several million, and why in the future no one will sell their Bitcoin anymore. At the end, I'll also give you a little assessment.
MicroStrategy is going to become the world's first Bitcoin bank, biggest bank in the world. And what did Saylor begin to drop as far as hints? And by the way, if you go back to 2010, Hal Finney talked about this in Bitcoin Talk Forum. He talked about Bitcoin banks. He felt that that was where the future was going to go as far as off the base layer, was Bitcoin banks, Bitcoin-backed banks. So Saylor has already given us the hints. Do you remember that conversation that he had with Saifedean Ammous about 2 months ago? It's the one where they're kind of a little button heads.
They're going at it a little bit, yeah.
Yeah. Well, that was called 4 Years to Bitcoin. If you go to 1 hour and 32 minutes into that podcast, and I've played it about 4 or 5 times now, there's a reason why Michael Saylor had that conversation. Because what was the conversation about? Bitcoin yield. Now, for anybody watching me right now, just pay attention while I say this one thing. If you have Bitcoin on a wallet and it's yours, it does not generate yield. But if you get yield on Bitcoin, you better figure out where it's coming from. So anyway, Saylor said, and he was pushing back on this. He said, well, what if it was in a country that was large with its own printer, its Fed, in a too big bank to fail? You could generate yield on your Bitcoin. You could live like the wealthy live now. Why does the royal family still have all their lands? Why do some families, the Rothschilds, why do they still have all their wealth? Because they never sell the wealth, the things that are wealthy, like Bitcoin. And you're going to do that. You personally are going to be able to do that in the future. You never sell your Bitcoin. You'll be able to live off that Bitcoin going forward. It's going to happen. So Saylor's already interested in this. And then, did you see the interview on the 11th of December with Ayers, I think his last name is? It's in a white hall. They're talking back and forth. Did you watch that one?
I didn't watch the whole thing, but I saw some of the clips from it.
Same thing. Same discussion comes up. And when safe, he mentioned J.P. Morgan. Who's he mentioned again in this latest one? J.P. Morgan, Goldman Sachs. Too big to fail banks holding Bitcoin. And in fact, there he takes it farther. He actually goes down the Hal Finney discussion, which is tokenized banks that are backed by Bitcoin, or in stablecoins, treasuries, because then he has a discussion about stablecoins. So that is coming. When those things happen, again, imagine Jamie Dimon, Mr. Evil. You think at 4 o'clock in the afternoon when he calls down to some pleb down there on the 8th floor down there in the basement, and he says, hey, move 100 million to such and such, because banks, they want to do that. They're going to custody, sell, and they're going to trade, and then they're going to buy Bitcoin. And when they do it at 4 o'clock in the afternoon, they're going to demand that they have block space. They're going to demand that the transaction gets into the block space. That if that pleb says, well, Mr. Diamond, we got to put a transaction, high transaction. I mean, he's going to get fired, and they're going to start mining their own Bitcoin. Because again, you have to have the hash rate. I'll tell you before I take a break real quick here. Just let me put this out to the people that don't understand. If you have a hardware wallet like God forsake, not a Ledger, but a cold bar or something,
or a Bitbox maybe, since they sponsor this show. Yeah,
a decent wallet. Yeah, exactly, a good wallet.
Yeah.
So if you have a wallet like that, if you don't run your own node, whenever you transact with your Bitcoin, you're using somebody else's node. You cannot get a transaction on the base layer without a node. So you go through a node. All the miners are running nodes. Now, the miners themselves, people mining right now, are directing their hash rate to mining pools. But those pools have all got nodes. They're the ones that build what's called the template, the mempool template. That template is what decides whether you get to go into the block or not with your transaction. So imagine at the end of the day, you're sitting there, and by the way, you can only last year we put in 4,094 transactions per block for a whole year on average, every 10 minutes. That's not a lot. So those nodes, when the block's found, they broadcast the transaction. Whoever won the block, let's say it's a mining pool this time, because that's where most of them are going, and they already have a template built with all the transactions in it. It broadcasts to the other nodes instantaneously. They all check to see if it's by protocol signed, and then it's broadcast. And within 2 to 3 blocks, it's in the blockchain. Well, to get in there, it's going to be a war. We're going to be fighting over that block space. It's coming.
I think this is a kind of another reason why, first of all, UTXO consolidation is important for the average person, just so that you can actually spend your Bitcoin on chain at a later date when transaction fees are both higher in Bitcoin denominated terms and much higher in dollar or fiat denominated terms. But also it's just it's one of the reasons that things like Lightning or Fedimint are so important as we go forward, because it's the entire 3 billion people, however many people we have on the planet now, they're not going to be holding Bitcoin on-chain Bitcoin in self-custody, most likely. That's a nice thing to hope for, but just the reality of the situation is that it's probably not going to happen, right? I'm not going to say it will not happen. I'm saying it's probably not going to happen, but these other solutions exist.
You're right on. You got it. I mean, it's not going to happen. To put half of them, 4 billion on there, would take 25 years. I mean, if they took over the whole blockchain, if you give them half, it takes 50 years. You put the whole planet on there, it takes a century. So it's not going to happen. And like we talked about with Hal Finney, he knew that, Satoshi knew that, and we are not going to be able to do that going forward. So something's going to have to give on this base layer. Yeah, for a secondary layer. Like you mentioned Lightning, and Lightning's great. I love Lightning. We'll use it all the time for like zaps and stuff, but it can't do it either. Fedimint is a very interesting idea. I'm really looking into pegged sidechains right now, like Liquid. I think that could be a model going forward. And that could be a model that these banks end up using, that same model. It could be the blueprint for how they do that. And eventually, I hate to keep talking about yield, but eventually we might be able to legitimately, with the world's best capital on the planet, I mean, it is the greatest capital that you could possibly, the most pristine asset, and banks are going to want it. So if you're willing to understand the risk involved and where the yield comes from, that could work.
And I think that's such a key point is, and speaking of, Alan Farrington, he's always the one, especially when some of these Bitcoin yield things, like Celsius, for example, blew up. He was always the one, where does the yield come from? Where does the yield come from? Because you should know. And also, you should know that you are taking a risk with that, because I struggle with saying that anything is risk-free from a lending your Bitcoin out perspective. And granted, one could make the argument, the counterpoint that, okay, well, there's also risks to self-custody if you screw something up, or you have a multi-sig and you lose 2 of the keys or whatever it is. And so there's risks everywhere, right? There's risks in anything you do. Your life is basically a series of decisions based on what kind of risk you are willing to take or not to take. And that's a decision that comes down to human action, right? What do you as an individual want to do? What are you comfortable with? What are you not comfortable with? So nobody's going to be able to tell you if that's the right decision for you. What's the right decision for Michael Saylor may not be the right decision for you. And that's okay too, But I'm glad Liquid's a great example, because it's been around for a while now. For anyone that hasn't used it, it works exceptionally well. And yeah, it's a federated model, right? It's a federated model. So you are putting there's a trade-off of trust there. You're trusting these federations, but they've been operating pretty damn well so far. It's not, I would rather have Bitcoin on the base chain in my own, multi-sig cold storage. But for certain things, Liquid is super, super useful. And I like I just had Prince Philip, who's, hereditary prince of Serbia and Yugoslavia, but also the chief strategy officer of Jan 3 on the show a few days ago, or beginning of this week. Been a long week already. But we were talking about Aqua Wallet, which Jan 3 has come out with, which I've personally been using a lot more lately. I think it's super nice that it handles a lot of the stuff for you behind the scenes, like swapping between Lightning and Liquid. And I think that's really nice. That's a nice user experience for people who don't want to have to, still in your own custody, you're still holding the keys, but giving you a smoother user experience that allows you to still do a lot of different things and, convert to USDT if you want. On Liquid, not on Tron or on Ethereum, ERC20. So that's even better. Like if you're going to use USDT, may as well use it on a Bitcoin sidechain instead of a shitcoin main chain. You know what I mean?
Yeah, I do. I agree 100%. I really, I've used the Aqua Wallet also, and a shout out to Samson Mao. It's been a great experience. Just like you said, it's a fluid, easy experience between, BTC, Liquid BTC, Tether, and Lightning. And it's cheap. It's not expensive to use, and it's private. It's private. I mean, that's pretty cool. So I'm not sure where things are going. I just know that we're going to have some major disruptions coming over the next year. This is going to be a volatile, a difficult journey, I think, for a lot of people to handle.
So, if you ask me, this was really an insanely awesome clip, and here it really comes out what Michael Saylor's actual strategy is. It's not just about somehow leveraging to buy Bitcoin, issuing convertible bonds or something like that, preferred shares, raising capital, but here it's really about generating yield in the long term, maybe also, too, be able to live with Bitcoin. I mean, you can already live with Bitcoin now, but that's the big problem with Bitcoin at the moment. If you want interest, a yield, a return, or whatever you want to call it, you always have to go to some dubious platform. They have third-party risks, and that's a big problem. Sure, with strategy, you also have a certain third-party risk. That's also what I always say, hey, think very carefully about what you're buying. There are simply different products now. There are Bitcoin ETFs, there's MicroStrategy, there's Bitcoin Spot. I always say, the safest thing is simply, to buy Bitcoin Spot, go to 21 Bitcoin, sign up there, use the code Bitcoin Hotel, then you get up to 20% off the fees when buying Bitcoin, then connect it with a TREZOR hardware wallet, and then you've directly withdrawn your Bitcoin. From 21 Bitcoin to your own hardware wallet, then you have the safest option here. But if you want to leverage more, if you perhaps want yield, if you can take on third-party risk and potentially don't have other trade-offs for it, not managing your own keys, and so on, then you can go with strategies like Michael Saylor and such. Overall, it will contribute to massively pumping up the Bitcoin price. Sure, I also understand all the criticism. You have to consider that Michael Saylor is building a very, very large dominance here. Some people say it's a Ponzi scheme that's bound to fail. I wouldn't go that far, but these are just the different possibilities, and many people are simply not aware of what Michael Saylor's larger vision might be. Sure, it might not be the OG Bitcoin anymore, as it was conveyed in the clip where Sethi Diamond said, yes, this is the scam that Michael Saylor is building. Scam, I wouldn't say that, but it's no longer the pure idea of Bitcoin, rather a modified idea. But I mean, Bitcoin is a technology that is in development, constantly being improved, and it was clear at some point that other financial products would be on board, that eventually there might be a yield, that banks would be implemented, and so on. So guys, let me know in the comments below what you think about the massive clip. Until then, peace out.